If you'd like to see more of our videos, hit the subscribe button to stay on top of the market news. Good morning, traders. Welcome to today's market review. This is Fred Razak at CMtrading. Today is May 27, 2020, and today is Wednesday morning. So looking at the highlights of the day, the Dow Jones continues its upwards momentum with a rotation of the bank stocks actually leading the markets higher. First, let's take a look at the market. So there's no major economic event scheduled for today, but as we look at the markets, we're starting out with the currencies, with the British pound rallying higher versus the dollar and sending some of the other majors higher as well. Now looking at the Dow Jones, it tops 25,000 and hovers above the 25,100-ish level, which is a bona fide breakout, okay, on the upside, really carried by the bank stocks, which means that the economy may seem like it's actually have some momentum on the upside as the easing of the lockdown takes place. Now looking at the commodities, they responded accordingly, with gold selling lower around 1,700 while oil remains at $34 a barrel and is steady. Lastly, looking at the stocks, as I mentioned, the rotation continues with the bank stocks pushing the markets higher. And interestingly enough, the FANG stocks actually failed yesterday. Okay, if we look at the NASDAQ, actually taking a little bit of a slide. So there was some profit taking in the NASDAQ. But let's take a look at the markets and see what we can expect from today's trading. So we're taking a look here at the GBP USD at a 4-hour chart. And you can see this nice little spike. Now, this has not happened in quite some time, where we had this type of volatility in a currency for quite some time, okay, since the beginning, just a couple of weeks ago with May 15th. But this is really before the massive sell-off that we had. Going back into mid-April, we were hovering around 126. So we have still way to correct ourselves if this is going to continue happening. Okay, there's a couple of points to make here. Let's just clear it up a little bit. Number one, okay, this double spike, okay, it is a bona fide support level at this 121. Now, I do anticipate this 122.84 level to be a subsequent support area if it does continue to retrace, okay? But it does look like it's at the beginning stages of making some future corrections on the upside. Now, when we look at the euro, didn't do much, okay? It did hover to its highs of 109.97, but we're at this range still, where it looks like the GBP is gaining some momentum versus US dollar. So relative strength for the GBP versus the dollar vis-a-vis the euro, okay, which means that compared to each other, the GBP is actually stronger than the euro right now versus the dollar. Okay, very important point, because you're looking to buy something that is strong and looking to short sell something that is weak. So those are your two items to look at between the dollar. Now jumping into the rand, interestingly enough, and I mentioned this earlier this week, this will continue making further correction on the downside, but it's not doing it with some momentum. It's just trickling down, bouncing a little bit, and then taking a further sell-off further down. So this may continue. There is a support level at this 1720-ish level, so just be aware of it, that we may see this further correction as this continues to break down. Now jumping into gold, you see we're trading at 1705. Okay, we are within these two parameters, but it's clearly that people are taking some money out of gold, out of it. But I wouldn't say that this is a sell-off. This is just, you know, some of the commodities just wavering off into its trading range. Now, we haven't broke 1700, so that's really important. And if we do, we may see ourselves correct ourselves down to 1673. Now, jumping into oil, not doing much, okay? Trading at $34 a barrel. We did hit this 34.5 as a resistance-ish level. So just be aware of it, that that's something to consider, that we are resistance-ish level at this area. So if we do break above it, that's something to consider. But I think we'll be wavering still until, you know, the economy even further retracts back to its somewhat normal level, as, you know, as transportation goes back to its normal level, as commerce goes back to its normal level. So I think that that still has way to go. Now looking at the Dow Jones, amazing, 25,168. Now we broke above this resistance-ish area. I'm going to draw it for you right now, because it didn't save it on my computer. 24,765 was that resistance-ish area. If you look at it at daily, we challenged it a couple of times, and we broke above that 25,000. When we're trading at 25,168, now this is a subsequent resistance-ish area right here. Okay, so just be aware of it. 25,160, yeah, just about. We're flirting on it on a daily. So consider this, okay? If we don't close in this gap at 25,837, we may see it retrace still. Now, what's carrying the markets higher are the bank stocks, okay? And I'm going to jump straight to that. When we look at the JP Morgan, it traded above $90 a share, above $92, where it was struggling with for quite some time. But we're still in this trading range, okay? Anything below 100 is still relatively in this range, okay? So something to consider if it doesn't break out higher. Now, looking at the NASDAQ, NASDAQ reflects some of the high-tech stocks. We're up this morning. When we look at it at a 4-hour chart, we're actually gaining some weight. But we actually sold off yesterday from 95,800 to 9,400, okay? About a 180-point move. Now, not a big move, okay? But when the Dow Jones goes up and the NASDAQ goes down, something's kind of off kilter, okay? I expected the market to actually be trading in tandem. And so what's happening is that there's a shift, there's a rotation in the market. When we do look at the FANG stocks, they were all down yesterday, okay? If you guys would refer to my daily review yesterday, I said they would probably be the go-to for the upwards momentum, and they failed us, okay? If we look here at Apple, we sold off, okay, nicely from 321 down to 316. We look at Amazon, we sold off as well. We look at Microsoft, okay? Let's take a look at a 1-hour chart. It did sell off as well. It did break to its 239-ish level, okay, which is a, we're looking, at a Facebook right here, which was its high of 239 and did sell off to 231. And if we look at Microsoft lastly, I'm sorry about that, okay, it's trading at 181. So there was profit taking in the high-tech stocks, okay, which I said would probably be because we're at that high level where people are going to be a little bit more conservative at this area and say, listen, we gained back from our losses back at the end of March, March 18th, when we hit our lows, and we want to feel comfortable now. We want to see how the markets are going to be reacting, and then we'll put money back. So at these levels, a lot of fund managers are reassessing and saying, listen, they're at their highs, okay, the market still has what to show for itself if it's going to go higher, and it's just a matter of time. If it does, really respond well to these stimulus packages and we don't have a second major wave of the pandemic, we may see ourselves back into normal areas. So, I think fund managers are still a little bit timid to put their hands into the market straight away and waiting until things kind of, prove them that the markets are coming back. So something to consider going into, the next 20 days and 30 days of trading. This is Fred Razak. I want to wish you guys a great trading day. Thank you.